welcome to TraderMerlin Show. It is your Monday edition. Welcome. I'm sorry I had to take those days off, but had a great time out in Atlanta. Hot Atlanta, if you will. Even went to a comedy show, saw some good friends, made some new friends out there as well. So all of you who are in attendance, thank you so much for joining and hopefully learning something from Larry, Todd Davis, and myself, and to all of the staff out there from Atlanta and Kevin Young, Mary Beth Motisi, and the whole team. Thank you guys for all the hospitality. It was an awesome experience. I look forward to doing it again here sometime very soon. Of course, I left all of you guys hanging. I apologize for that, but hopefully we'll make up for it this week. I'm trying to get a couple guests on the program as I have a few moments to look around and maybe get some people on. I will have next Monday, we're going to have John Rowland on to talk about the natural gas craziness that's going on. If you guys have not seen the natural gas charts, like what on earth is happening out there? But NG will be one of the topics du jour for next week. I'm sure we'll talk a little about this week as well. Now I see we got a lot of new faces in here, at least new names it looks like. So hello everybody. If you are new, hit that subscribe button. If you are a regular, well, cheers everybody. I don't need you to hit the subscribe button. You're probably already subscribed. So let's talk about today's news. Now, we obviously could go down many different directions. If you saw the Monday morning must-knows that I did for Online Trading Academy, I recorded that one in Atlanta, literally in a coat closet because I didn't have a studio to work with. But hey, we make do with what we can. It was interesting because Sunday night there was an interview with 60 Minutes. I'm hoping that some of you guys got to see that one. It was interesting. It's nothing out of the ordinary. I think most people kind of knew all this was going on after watching the movie, the Social Dilemma, which really opened my eyes to it. It made me think that there was a lot of deceptive stuff going on the part of Facebook behind the scenes, and I kind of felt that this was a no-brainer that this was happening. But now you actually have somebody bringing out documents showing all of the proof and facts that Facebook was covering some stuff up. So I thought, why not do a show on that one, because I had one question from a viewer. Facebook, for the love of money. Now this comes from a question from Amy. Says, can you comment on Facebook? I own shares and am concerned. Well, I personally think that you should be concerned. You know, we have, oh, thanks, Big Ape. Hit that like button early. Yes, Brandon, they got owned today. Love it. So let's start basically with the basics here. It's nothing new, at least from my perspective, maybe from yours it is. It's nothing new that Facebook might be doing some shady stuff behind the scenes. It's business. When you have shareholders, you tend to put social responsibility and maybe even ethics on the back burner for the sake of profits. Don't believe me, just look at Wells Fargo or Enron or WorldCom or many of these other, or Goldman Sachs, who has been paying hundreds of millions of dollars worth of fines for misleading investors, for bad information. They're much easier for them to say, oh, sorry about that, after the fact, after they've made billions of dollars. So to me, the ethics for a publicly traded company starts to go out the window. But there's something different here with this piece, because you had testimony by Zuckerberg and others in front of the Senate and subcommittee meetings on the, too big, they're getting too big, they're too powerful, etc. And that was in 2020 when they were making those testimonies. And they said that they're not promoting hate, they're doing everything in their power. And these documents actually show that Facebook is really lying during those conversations. So I thought that was kind of interesting, that you have this, I guess now you're perjuring yourself, right? Now, of course, Zuckerberg can say, I know nothing of this. These were prepared statements from my department, but somebody's going to take the fall here if this, in fact, does get to a trial type of situation where they perjured themselves under oath. Remember, Martha Stewart did not go to jail for insider trading. Martha Stewart went to jail for perjury and lying under oath. And you did this in front of the Senate subcommittee. Pretty sure someone's going to end up going to jail on this one if those documents do make it all the way to trial. Now, given the fact that, you're a $1 trillion company, boy, I tell you what, this is where you see those classic movies, right? Where someone ends up, getting knocked off right before the trial because it could do them wrong. Boy, I tell you what, you got $1 trillion, you can do a lot of things with $1 trillion. Anyway, I think it's going to be very interesting. So let's take a look at the Facebook chart over here. I've got natural gas up right now, but I'll bring up FB. Facebook got a real big punch to the gut today, down almost 5%, but you can see that the writing was on the wall here. I mean, that this was drifting down, going into that story. Of course, she leaked that information to the Wall Street Journal several weeks ago, but the story last night, I think, really makes it mainstream, really, really brought it to light. Now, the question is, where is this going to go? So Amy says, I own shares and I'm concerned. Personally, I think you should be concerned because you already had regulators saying, Facebook's too big, Google, Amazon, Apple, you guys are all way too big. This just gives them all the reason in the world to go after Facebook. Not just because it's too big, because now the documentation in those reports are saying, look, Facebook was well aware that it's creating fear, it's creating hostility, it's polarizing the American people, not just American people, people all over the world. So, to me, this is a pretty big piece, and I think that this gives the regulators a ton of candid information that makes Facebook look really, really bad. So what is it? What do they do? They break them up? Do they put regulations on it? I don't know. I just think that the downward pressure here on Facebook is going to grow and grow. Not to mention that they've been down around the world, guys. I don't know if you try to log into Facebook today or Instagram. Oh no, you guys can't access your Instagram today? What are you going to do? How are you going to follow all those fashion designers and get cooking recipes from people out there? Oh my goodness, and stock tips from your Instagram people. Oh no, oh, the fear. Macaulay Culkin going to be loving it today. I love it. I love the fact that Facebook and Instagram are down, and WhatsApp. Kind of interesting that this hits the wire and all of a sudden they are shut down. You would think they'd have a much better system in place. Anyway, enough of that rant. Here's that chart again. So for me, if I'm in Amy's shoes, I got to think to myself, where is the line in the sand, right? Where do we get to shut this one off? If you are long right now, you got to have a bailout point. Personally, I do think that you've broken it already. As this thing was trending up, I'd be getting out somewhere below maybe $350 or this level right here, right around 335. Now you're on climactic volume, very high volume, and where's your next really strong demand zones? I don't see anything that screams demand. Even these levels down here at 300 are somewhat weak in my opinion, right? So I don't know. I'm not a huge fan of Facebook anyway. You guys know that. But here's your trend on it. Could you see this thing down around the 140 mark? Well, yeah. I mean, in theory, sure, but I think you'll have a problem down around your 260. That's going to be a big stopping point from a bounce perspective. But really, to me, Facebook is now facing a whole new battle, and that is that they lied under oath, that they had all this documentation. They've been lying not only to regulators, but here's where it gets really interesting. They've been lying to investors, because remember, you're a publicly traded company. Facebook is responsible for any material findings to report that and disclose to the population. So now anybody could theoretically, if there's a class action lawsuit, which my guess is there will be a class action lawsuit against Facebook because they have not been disclosing all this information. Now, to me, it's kind of a double standard, right? Because if you bought long Facebook, you knew they were doing this stuff. That's how they got their market share, right? They know, it's proven in their documentation and their studies that if they post good news, people don't stay there, they go away. But if they post like bad, hateful, angry articles and news, then you'll click on those ones and you have more engagement. They make more money off of it. So they know that. I think we all kind of understand that's the way it works. No one wants to watch the good news channel, right? We all watch the evening news to see who got stabbed and who got shot and what car accidents happened and where's the major tornadoes. No one watches the news to see, hey, fireman rescues cat in Orange County. There was a great cooking charity event going on at the park down the street. No one wants to watch that stuff. It's not exciting. So I think if we're investors, we know that holding Facebook, and that's what moved them up in value. Now what you'll get is all the investors of Facebook wanting to sue them. Oh, because why? Because now it's going to end up going down for a while and may as well make some money there as well. So I actually did own some Facebook shares for a little bit, so I will probably sue if it's a class action lawsuit. Heck yeah, I'm jumping on there and suing them to get my little chunk of change. Now, Amy, you're concerned. I already mentioned that part, but where's your stop? You have to figure that one out. You could, if you are currently in positions, you could be using options to protect your portfolio. I don't know how much of Facebook you have, but I know there's many others that are long currently Facebook. Why not? It's been one of the best performing securities out there. So I'm not bullish on it. I think that this is just the tip of the iceberg. I think that now regulators who are just starving to make an example of somebody, right? You got Ginzer going after cryptocurrencies. I think he'll do something with the sale of payment of order flow. I think he's going to go after that. So he's got his champion, and I think you're going to have senators all going after Facebook now, as they already kind of have in the past. I wonder if Kaplan is still holding on to his Facebook shares, because after he left the Fed, he probably still got a big trading account. So anyway, I think, Amy, that you're probably going to see more downside movement. It would not surprise me to see some bounces up here, right? You had a pretty significant knee-jerk reaction. You had significant volume on today's trading. You can see here on the daily, which to me, usually when you have climactic volume like this, that generally represents a turning point or a bounce. You can see the last time we had that really aggressive volume spike, we hesitated the next day and then rallied up about 20 points or so, or 15 points or so. So expect there to be a bounce here just on the panic sell, but But I think once the reality sets in and people kind of understand that Facebook is no longer this smooth sailing juggernaut with unobstructed views of higher highs, I think now you have much bigger pressing problems on the front. Okay, wait, I got a whole bunch of stuff here. Brent says, I haven't watched mainstream news for like 15 years or more. Good for you. I mean, and you shouldn't. If you watch the Social Dilemma, which, who knows how accurate that is, but the reports that this woman released pretty much solidified, they are feeding you bad news. And I'll give you an example. I won't mention his name. But I used to work with a guy. He was very nice, very jovial, always cracking jokes, very funny. He's not from California, and he lived out of state. And, every conference, I would meet the guy and just always seemed like a lot of fun, right? Never really said anything bad about this person, that person. We all have our grudges against certain people. But for the most part, a great person. And then after, OTA got shut down for a little bit, he was let go. And now he's a radical. He's clearly been radicalized by social media. And he falls into one example of the spectrum. And again, you guys know me. I'm not about Democrats. I'm not about Republicans. It doesn't make a difference to me as long as we all treat each other with respect. But he fell so hard to one side, and that he was on the Trump side. And he was going after everybody. He was dropping 4-letter words at people from California, and you effing idiots, and you stupid morons, you all like just off the rails. I'm like, man, what happened? You were so nice 6 months ago. And I'm pretty sure what happened is he starts falling into this rabbit hole of clicking on Facebook, and Facebook's feeding him more radical stories. So pretty soon, this is the kind of guy you put on an FBI watch list because you're like, man, he is off the rails. I'm worried that there's too much of that. Again, I think shut down Facebook personally. Get something better out there. Call it the good book and just make it good news as opposed to be concerned about our bottom line money. So, Amy, get out of Facebook. Stay out of it. I think you're headed for a more downside movement, even though they're the biggest company in the world. I mean, not biggest company, but the biggest reach of anybody in the world. I mean, think about it. They have 2.89 billion users. That's 36% of the global population is using Facebook. And the comments that this woman made really kind of drives home how they utilize Facebook to manipulate the population of countries, not only the people, but also how to radicalize them in different for different political parties. And I think we've all seen that here. It's really just, I agree, John says it's so easy to be radicalized. It's sad. I've seen more of my friends disappear in the past year simply because of that. Like, I literally have to just go, I can't take you anymore, man. You're believing whatever this social media platform is shoving down your throat. Do your own research, right? I'll give you a good example. There was a video circling around on Facebook, and it doesn't matter whether you're Democrat or Republican. This could be done for either party. It's about taking things out of context and modifying videos. It was a video of Barack Obama at a podium, and the video, Barack Obama says, "We must control the American people. We must force them to bend to our will." And I'm thinking, it doesn't sound like something Obama would say. What is interesting is if you watch the full interview, which has been that video on that Facebook was putting on people's timelines, it was fake. The real video was Barack Obama saying Americans have the most freedom and liberty, the choice to do what they want. It was a very positive thing about being an open democratic society. And then he says, but in Russia, they bend the people to their will. And it was just edited down, and it created this hostility out there. It created aggression against, of course, Barack Obama, the Democratic Party, when it really shouldn't have. He never made that statement, and we don't know, right, what information is being fed to us. If it incites you to click on that and get you angry, Facebook will put it out there, so there they go. We're friends. What do you think, Son? Let me real quick see if there's anything on this one, because I know I touched on too many things that were kind of political, which I normally don't like to do. Now it'll be called the Ang stocks with no more F for Fang. Oh, it'll still be in there, Rob. Facebook will still be in there. I'm just curious to see. Remember, the legal process here is going to take years for anything to happen. By then, Facebook will reinvent themselves, fragmented themselves. They don't have to worry about it. But it will take years for this to get to a substantial decision in front of Congress or get any legal action done. So I'm not too worried about that. Let's see. Brendan, are you between bans? Brendan, you just don't like social media because I keep banning you. Zuckerberg lost $7 billion in net worth today. Was that it? I thought he might have lost more than that. Oh, good for him. I've had to block unfollow. Yeah, I know. Yeah, I'm with you, Kevin. It's unfortunate. And look, I'm not saying you can't have our viewpoints. I'm not saying we can't be passionate about politics or religion or anything like that. It's just you have to have a respect for other people. And I think more importantly, you really have to understand or check but verify, trust but verify all information. I mean, you guys have actually, there's been a couple times where you guys have caught me saying facts that I pulled from the web, which I thought were trusted, and you guys caught me and said that one's wrong, and I'm first to admit it. Sorry about that. But some people hold on to it and just will never, ever let go. All right, let's see. Chowski. Let's move on from this topic of Facebook. I think that for the love of money is a pretty apt statement. We've seen obviously their share price soar and continue to soar, well, at least until 2 or 3 weeks ago. Who knows whether that might be the all-time high for Facebook, but I think it is a very troubling future for Facebook with all these new allegations. And they're not allegations. They're facts. I mean, you have documents of proof. Of course, right now, there's probably an internal department trying to burn all documents and records inside of Facebook. Make it go away, people. Make it go away. Not going to happen. All right, let's see. So, Chowski says, bear trap, aggressive dip buy today on SPY. Let's look at SPY for you. So here's your SPY. I've still got a bunch of lines on here. Sometimes I forget even why I drew these lines. If you look at where this SPY was, there's this level down below, which I believe I drew a week or two ago. I don't remember when I drew it, but you guys can see it's this little yellow box right there. We pretty much came down to it today. Not quite there, but almost. The bottom of today's trading activity, which you can see on this long topping or bottoming tail here, that was 426.36 on the spiders, and 426.06 is the top of that zone for me. So it didn't quite make it into that zone for me. That's all right. Your comment was, could we take a look at EVC when available? Buy the dip today on SPY. Well, certainly if you're using demand, I mean, to me, it's a little aggressive to be buying before it hits a demand zone. So, I would not be a buyer today, but I would be if it got down in this zone. And I was holding off on closing out some of my puts. As you guys know, I still am in possession of all of my puts. I have the NASDAQ 15 and I have 40 short on SPY. Or sorry, not short, but I'm short SPY and the NASDAQ. Really expecting it to drop a little bit more. I was going to close out my SPY if it got into this zone, or some of it, unless it really started to drop more aggressively. So for me, I wouldn't buy the dip. But again, it comes down to rules, right, Chowski? And my rules aren't necessarily yours. We all have to figure out what works for us. For example, I wouldn't buy personally unless it came into this yellow box. Now, it's how we buy once it gets in there, right? So it could be as it comes in, could be as it's down in the zone, or as it comes out, right? There's different ways we can buy this. We can also look at different numbers because I've got kind of a wide zone here, right? 421 to 426, that's a $5 range. That's pretty big. But some people may do this and go down to like a 4-hour time frame and see if they can whittle that zone down a little bit more. And let's do that. So now you guys can see I got this yellow box. I might shrink this one down to, let's say, right there. All right, so now all of a sudden, if you take the volume off this page, you guys can see a slightly different picture. I've narrowed that down a little bit. So it was 426. Now I feel a little bit more conservative for me. Actually, more, I guess it'd be more conservative because I have to wait for price to come down. But notice where we are now when I go back to the daily. Right? This is all about adjusting things to fit your personal trading objectives and perspective. So that means I still had more room for it to drop down before it executed me on the spider. So I don't know if I would call this I think you called it a bear trap. Where did you put it? A bear trap, aggressive dip buy. I wouldn't call this a bear trap. To me, a bear trap is when it breaks something, a significant demand zone, right? Didn't really break much. We broke the previous days, our previous sessions lows, and the same thing before that. So I'm not super concerned about any bear trap here. If it broke this level right here, and I'm trying to keep the line right on the lows that go back to the 19th of July. That's kind of my number. Again, you guys have to find yours. But the low for the 19th of July was 121.92. I'm sorry, 121.97. So if we get down below that 121.97 level or 92 level, and then that's where you get the bear trap, right? It breaks down below something, causes everybody to start to open a short position or get stopped out of their longs, and then it rips back up. So those are the levels I'd be looking for, Chowski. What else do I got from everybody out here? Bear trap goes by. Yeah, and Kevin says maybe even drop the hourly or 15. Sure. Sure. Now, my concern, at least for me anyway, for my style, is the more microscopic you look, the more trades you're going to be making. So if I'm looking at the daily, which is where I like to start big picture, if the zone is too wide, whether it's a supply or demand zone, I'll refine down to a different time zone and just make it a little tighter because I don't like having really wide stops. It means if I have a real wide stop, that means I can trade less quantity. And I'd rather trade a bigger quantity and have a tighter stop. Therefore, if I'm correct, and I believe that I would be with my analysis, then I'll have a much greater gain. If I have a real wide stop, I'm basically creating a buffer for my indecision or my inability to pick that level correctly. So I'd rather have a smaller stop loss, right, a tighter zone. And if it doesn't get there, it doesn't get there. If it does, great. But if not, I'm hoping I get to that zone and then it rips out. Therefore, I can have more quantity, shares, contracts, whatever, and I have a greater profit on that trade. So there you go, Chowski. There was your SPY. Let's see. It closed half my SPY puts last Thursday. Damn it. Well, hey, you made some money on them, buddy. You made some money. It's okay. Don't worry. I mean, last Thursday was a great sell-off. I mean, today we're right now pretty much at the same price. Right, Big M? So here's your SPY. You can see we're just slightly lower than we were last Thursday. No big deal. Let's see. What else do I got here? New headline for media, the $1 trillion margin call. Borrow money. Borrow money is at $815 billion. Okay. $1 trillion margin call. I don't know quite, Rob, what you want me to get there. Let's see. Chris Cedeño, I have a question about the stop orders on Coinbase Pro. What's the difference between a stop price and a limit price? That's pretty simple. Let me bring that one up for you here. Bear with me. I may have to log in, so let's see if I can. Hopefully I don't have to log in because it just takes time and confirmation. Oh, come on. All right, good. I think we're in. So let me break this one up here. When you have a position open in Coinbase, and let's see if I have what positions I have here. So I've pretty much moved everything off of my Coinbase Pro account. But let's say we just want to look at Ethereum, right? So I'll go to trade. We'll go to Ethereum USD. Okay, select my market, and we'll go ETH USD. So I've got this one long right now. It'll show me right there. You can see I've got 6.04. You can go in here and put in stops, right? So there's two different pieces to this. You have a stop price and a limit price. Essentially what you're saying is you should be, in my opinion, using a stop market. All right, so let me see if I can draw this one out for you because it is pretty important, and my art skills have been very bad, but let me see if I can do this for you guys. I need 4 screens. I've got 3 screens, but I want to add a third one here to draw this out for you. And let me change that. Bear with me, guys. I need TJ. Where's TJ, damn it? All right, let me bring that up. Here you go. Okay, so I have a blank screen here, and I will do an example of that just to explain it. So there's 2 factors. So let's say I'm long Ethereum, and I've got this trade set up. Here comes Ethereum. It does this, and it bounces up. All right, so I'm going to basically do a couple things. I'll map out my zone, right? So there's your zone, and I'll say I'm just making up numbers here. So let's say this is $100, right? And I've got, let's say my stop loss is 98. So if it gets below 98, boom, does that, I'm out. Right? So I'm basically risking $2. That's the easy piece. So now you have to say, well, what condition? If I'm currently right here where the price is, how do I put that stop loss in place? Well, with Coinbase or any other platform, guys, you simply go into the settings there, like you said, and you put stop order. So there's 2. You have STM and STL. Stop limit and stop market. TJ, I thought TJ was out golfing. It was weird. I haven't seen TJ in quite a bit, but looks like he's golfing a lot. So stop market would be very simple. It basically is an if-then statement. It says if price is, if the current price is less than 98, market sell. Right? So sell at market. I like those better because a stop loss, if it hits right here and hits that 98, I want it to be out. Done. The challenge with what I see with Coinbase is they don't allow you to do that. So they're basically saying you have to set 2 conditions. And it says if the price of the security is less than 98, then limit order at, and then you specify the price. So here's the problem. If you specify, let's say you do 98. That means that once it hits $98, that's the trigger, right? That's your trigger. If all of a sudden it drops real quick and gets below 98, you're still going to be holding long. It won't get you out because you want to sell for $98, nothing less. So what a lot of people will do is they will make this, let's say, 97, which means you're giving it $1 worth of slippage, or something like that. So that's the big difference there. Is you have the ability to limit your stop, but for me personally, if it's a stop loss, I want to be out. They're not securities. Well, okay, that's right. Sorry, Jim. They're not securities. When you have these items that are cryptocurrencies, which we don't know what they are yet, but you look over here, if you look at your stops, they give you a stop price, so that would be the trigger. So let's say right now, Ethereum's trading at 33.85, and I could say my stop price is going to be 3,300, right? I'll do my max, means sell out my whole position, and now here is the slippage. Like, how much am I going to let it slip? Okay? So if I did 3,300 and this thing just real quickly drops by 1 penny below 3,300, I may not get out, right? I may not get out. That's not a good thing. So I want to allow for slippage here, which is why for stop losses, I always use stop markets. But maybe I want to do something like this. I'll go 32.90. So I give myself $10 worth of slippage on this order, if that makes sense. Okay? So there you go. That's kind of how you would do it with Coinbase. And pretty much, it's not just Coinbase, guys. This type of structure here where you have stop limit, stop market, it's pretty much the same on all platforms, right? It's going to be fairly standard out there. Cool. All right, let's see. $850 billion in stocks are bought on margin. Oh, that was, yeah. That's really the challenge I see with this market rally is so much of it has been bought on margin. I didn't know it was 815 billion. I feel like it's more than that because what you have is someone buys $1,000 worth of stock, and let's say they're on. Actually, let me inflate that. An easy number: $100,000 worth of stock. So they have a $100,000 account, and you do your margin. You have 4-to-1 overnight or 2-to-1 overnight margin in stocks. That $100,000 I can now buy $200,000. So I buy $200,000 worth of stock, and it just starts to rally up. Now all of a sudden, that security gets to, let's say, my portfolio is now $400,000. Now I can actually borrow more. So I'm snowballing in leverage. I can build a bigger and bigger and bigger position, which is great. I love doing that. I love the act of, I hate using the word snowball because that's such a bad connotation with other things, but snowballing and avalanching, if you will, into a position, just making it bigger as it's moving in my favor. The problem with that is, as you do that and it gets bigger and bigger and bigger, it won't have to fall as far to trigger a margin call. So before, if it fell, let's say $10 per share, oh, that was my stop out for margin call. But because it's moving up and I bought more and more and more, now it only has to fall maybe, let's say, $1. And then all of a sudden my margin call gets triggered. So when you have big moves like today, and this is kind of what I've been waiting for, actually I'm waiting for a sharper one. I think what you're going to get is if this market does drop another 3, 4, 5%, you'll start to see some margin calls. You'll start to see people who have been overly leveraged forced to liquidate their positions, whether they do it themselves or their broker just says, hey, we're getting out for you because you're getting too close to your maintenance margin. That's what happens when things go parabolic, is people snowball in, they pile in with everything they got, and they buy as much as they can. Then it doesn't take much of a fall to trigger that. And when that does trigger, then you start get this cascading effect where it triggers a margin call and then things sell off aggressively. And then all of a sudden, as Batista says, the panic kicks in where people are like, oh shit, I got to get out. And then they sell, which triggers more of a margin call. And then you get those 10% down days, which I'm just salivating for. Yeah, cool, Rob. Yeah, thanks. I didn't know when I saw the 815, I was kind of scratching my head, but thank you. I do think that's a big factor with why I believe we're going to see a flash crash here sometime soon. I really thought we'd see it in September. That's why I was kind of building a bigger short position, but didn't get it, although we did get a nice down month for me, which is great. Let's see. Yeah, Trent, that's a different... unfortunately, I don't talk like that. Trent was saying, just wondering, I hear Bob Dunn talk about S&P 500 equilibrium. Where do we find these equilibrium zones? For me, it's just drawing them out on the charts, right? It's looking at the price charts and saying, where do I see prices at? Where is kind of a balance of buyers and sellers? And generally that's going to be a demand zone or a supply zone. They're equilibrium. And granted, some people would think that that's where they're going to turn, but they can go in those zones and just stay there for a little bit. That's fine. It's saying, where do we see an abundance of buyers and sellers, in my opinion. I'm sure Bob has a slightly different take on it. Bob and I are very different when we look at market analysis, at least. So, yeah, I don't know exactly what it's referring to when I talk about equilibrium, but that's to me where you don't feel like you have an abundance of buyers or sellers. It's just that kind of point where everyone's just kind of waiting. To me, that's generally a reflection of candlesticks. I love looking at candles to see equilibrium. Equilibrium would be something that looks like a doji, or a spinning top. So for those who don't know, let me remove all of my artwork over here since I've got the artwork platform. So what do those patterns look like? So if you have a market that's, let's say, been rallying up. So here you've got, oops, no, I've got to go back. There we go. Okay, so I've got market rallying up. And then it does this, right? Just traverses sideways. To me, that's equilibrium. Now, I know that you could argue this is supply. Well, we don't really know it's supply yet. We really can identify it as supply if it does what? If it breaks down, right? If it does that, then okay, it's supply. But we might not see that. So equilibrium is just that moment where it zips sideways. And for me, when you see candles that look like this, with big bodies, that's not really indecision. Indecision usually looks like this. Small ranges, small little bodies with little kind of wicks on top. That's when you start to go, okay, there's indecision here. Especially if you have volume that's kind of higher on those condensed ones, because it's just this battle of people going, I don't know what the heck's going on. We're not gonna stake a claim. We're not gonna go long. We're not gonna go short. We're gonna kind of wait and see how it pans out. So to me, that's more equilibrium. But we may have different ways of viewing that one, Trent. But good point. I'll see if I can get Bob Dunn back on the program here at some point soon. Is it a director's only shirt? Oh my. You know what? The best thing about these shirts is it's an online training academy shirt. And I'm part of the instructor team. I never was a fan of polyester, but you know what? They don't wrinkle. I sure love no wrinkle clothing, especially because they charge you like $3 just to dry clean a shirt nowadays. Like, man, the shirt cost me $10 or $20, but now I spent $300 worth of dry cleaning over the past couple years. It's crazy. Then I go shopping and got a list at the ready. Good. I don't think we're going to get that big sell-off you guys might be thinking about. Equilibrium is high plus low plus close. So if that's the case, then you're doing basically pivot points. So pivot points are a different way. I don't use pivot points, for example. So thank you, Adam. You might actually be in Bob's signature series, which could be do that. He says equilibrium in Bob's world is high plus low plus close divided by 3. That's a pivot point. That's something floor traders use. And I'll tell you that for me personally, I don't like it. Here's why. There's so much more to Dunn's strategy for sure, Lisa. There's actually not a lot to Bob Dunn's strategy. Let's be honest. It's about momentum. It's about trend. It's about momentum and spotting those things and staying on the right side of a trend. If Bob was to say, hey, this mantra is one that if you pick a whole bunch of different mantras out there, sell in May, go away, Santa Claus rally, one of his favorite would probably be the trend is your friend. Because he is really a trend type of guy. So here's the one reason I don't like things like pivot points for the market. If you look at what that Adam just sent in, he says equilibrium is high plus low plus close divided by 3. What is that actually telling you? You're taking the high of the day, the low of the day, right, and the closing price. What about the open? The open's important too. That's where institutions thought it should start. So they take those 3 factors and divide by 3. There may not even be, theoretically, a supply or demand zone at that where that number is. I want to go see the actual numbers, and that's it's a matter of personal preference. I like to look at a price chart and see there is the spot where I can see price turn or see price hesitate. That's more important than taking a derivative of 3 numbers. And I've never really liked pivot points. It's an old institutional thing, but not really for me. Yep, exactly. Well, and here's the thing, Adam, and this is where I think it's actually kind of important that you bring that up. It's a good point. Bob says it's almost all momentum. And I think that you can improve on momentum by using supply and demand, right? So if you got a momentum trade, and he's generally looking at the bigger picture, right? It doesn't go smaller than a daily time frame. So if you have this real big time frame and it's trending up like most securities have been, then all of a sudden we can start to look at buy points. Where is the optimal point to buy back in and build a bigger position? That would be off of demand zones. So to me, it makes sense. I love Bob's strategy. I'm a momentum trader as well. I mean, that's really how I cut my teeth, was day trading momentum, right? My momentum was on a 5-minute chart. And yeah, I know Bob will badmouth anybody who doesn't use a daily chart. Tell him to shut up. And I told him on this program to shut up because that's his preference. Yes, bigger moves happen on the daily time frame. Bigger moves happen on the weekly. But there's plenty of opportunity on the small time frames, like the 15-minute or even the 5. It's just you're going to do a lot more trading, and the trends aren't as strong. But there's still plenty of opportunity. Any thoughts on silver over the past, for the next 2 weeks? Yeah, I told you guys I'm in silver right now. I've got a pretty sizable position on SLV. I am, right now I'm selling covered calls. You can see this 149. It's actually the 150 mark is where I am. I have my calls for the 15th of October. I'm hoping they expire worthless. I'm selling, so I'm collecting that premium on those ones. I don't know. We talked about this one a little bit. I'm not that overly excited about this one right now. I'm really not super excited about the way that SLV is trending right now. You go back to its May highs, its lower highs, its lower lows, lower. So I'm not feeling very confident, which is why I sold some of these covered calls. Where is it going to go the next 2 weeks? I mean, if you look at this price chart, I'm saying this just off of the trend, it looks to me like this thing's gonna be headed down. Now I hope it doesn't. I hope it stalls and forms a base right around 21, because then I will start selling covered calls at even higher prices and making more money. So that's my take on silver. The thing that scares me about it is you notice that there's some unfilled gaps over here, and they're significant. These are big jumps up. It's had a huge run back in 2020. Really, all of 2021 has been pretty sideways, if not down. So I'm not a really big fan of this chart right now, and it's almost hypocritical because I'm long silver. I am long-term bullish on silver, but it looks to me like it's just under a lot of pressure right now. I do think at some point the discussion will elevate on inflation. And it's funny because I'm hearing all these talking heads on TV now really making more of a deal about it. I think, guys, we've been talking about this for a while. I think inflation is the big, ugly person in the room. It's no longer the outskirt discussion. It's like, this is it. Even listening to Powell's changing his talk track the other day on inflation, now it sounds like he's pretty almost nervous about it. So I think we have major supply chain disruptions, right? You can see what's going on with these shipping containers all over the world. I don't believe that when the supply chains are fixed, meaning we get everyone back to full employment, the ports are back to full, and everyone's working again, I don't even think you're going to see the shipping costs go back down at that point. They've already got it there. I think that once you get a high price for something, people are going to pay it. They'll keep those prices there. So I think that inflation with regards to shipping is here to stay. Maybe not at the $12,000 per container that we're paying right now from China to the U.S., but maybe it drops back down to, let's say, $8,000. Well, remember, it was $1,000. It was like $1,500. Now it's $12,000. So that's a huge jump up. My guess is they'll lock in some more of that profit if we ever get back to full shipping schedules like we did before. All right, let's see. Let's talk. What do we want? You got somebody talking about gold. Gold, pretty much the same boat. You look at gold. To me, gold looks a little bit better than silver just because it hasn't been able to break these lows from early 2021. We kind of triple bottomed on this thing, which is the logical point for it. But look at the chart. All right, it's slowly making lower highs. If we could draw a trend line, if we really wanted to, just for giggles, let's go through here. It's not the best looking trend line, but you get the idea. I mean, it is slowly looking weaker. And again, I'm long-term bullish on gold. I think that if inflation goes back up to really high levels, and I don't know if we'll get to the 80s kind of inflation, but if it does, gold's going to do really well. I think you will see gold really start to take off, go towards the safe haven of commodities, right? I think that's the safe place that most people, not only historically, but even in this marketplace, will look at and say, that's where you park your assets if inflation gets out of hand. For me, it would be gold, it would be silver, and for my personal take, a lot of cryptos. So I'm looking at things like Bitcoin as an inflation hedge here, where again, it's still my biggest position. I have not added to my Bitcoin position recently, but I may. I'm just trying to diversify my portfolio a little bit. It still is the number one holding. I believe it's 32% of my portfolio is in Bitcoin at this point, with Ethereum a close second. So I'm bullish on it. I do like gold. It just right now might not be the best time to buy, right? You can basically look for buy points, but it doesn't have any really technically anything speaking to me that says buy right now on gold. Yes, Brendan, and you're right. Manarino wins, although we're right at that line, by the way. We're right there. I have that yellow box on this chart here, and we are literally right at it right now. But yeah, it's been a really bullish run. The past 3 weeks have kind of surprised me. I didn't think we'd get back up to these lofty levels, but here we are again at all-time highs. Yep. GD, I would do either way. You know, I'm not a big, if you think about if you're one of those people, you know, a doomsday prepper that thinks, oh, well, the market's going to go to hell in a handbasket and everything's going to come cratering down, then you probably don't want to own like GLD. You probably want to own physical gold, right? You want to buy physical gold. So get yourself some bullion, get yourself some gold coins, something like that. I like physical gold. I don't have a lot of physical gold. I've got a few 1 ounce coins, and actually, it's interesting when you look at gold because there's a couple different takes on it, right? You can have gold bullion, which of course is great, but then you can also have things like scarcity. So I have some very rare 1800 gold coins. So yes, I have the melt value that's going to give me, 1770 per ounce. But the scarcity of these coins are so rare, I might be able to get 2 or 3 times as much as that because of it. So it's nice when you look at gold to look at something where you have the scarcity aspect as well. It's kind of cool. It's fun to hold a coin in your hand that's 150, 200 years old. It's kind of cool. Funny, I don't know if you guys ever saw, there was a show I did on the Power Trading Radio Show, which was awesome. His name was Paul Busby. I don't know if you even know if the Power Trading Radio archives are still up. But his name was Paul Busby, and he brought a whole bunch of gold coins on the show. Not just gold, but just rare coins. And he worked for a company called Rare Coin Wholesalers, who I really thought was on the up and up. They seemed like very good company and legit. He had a buffalo head nickel that was worth $550,000. I mean, it was this big. It was a tiny little buffalo head nickel, and there's like 10 of them in the world, right? And I was like, oh my God, that's like a house. It's a nickel worth the price of a house. And he goes, it's just going to keep going up because of scarcity. And I was like, okay. So one other thing to think about if you're looking at gold. Got the 1700 put expiring on 20. You mean the 15th of October? You're doing the monthly, Richard? The options expire on the 15th of October this month. Okay, cool. What else do I have? Same guy who said buy crypto last year said inflation would be a problem. What? You talking about me? Oh, well, both of us. Yeah. We're both saying inflation can be a problem. Let's see. What do I got for you guys? So I'm going to real quickly look at some things that happened today, at least from an economic perspective. If you are trading things like the Aussie dollar, right, there is some announcement happening. You can see right down here at the bottom. That's going to happen later on tonight. AUD, USD will be reporting their rate announcement. And there is no real shock to the system expected here with regard to the cash rate. It's just that they came from lows down around 54 against the US dollar, shot all the way up to 88, and now they're slowly drifting down. I'll bring that picture up here for you. 1 second. So there you go. Here's your Aussie dollar. There is an interest on a lot of central banks to keep their currency weak. So it would not surprise me to see them come out with no rate change, but make a statement that says, look, we're targeting 66 or 64 because the Reserve Bank of Australia is really good about that and kind of telegraphing what they want to have happen. And this is something that David Warner follows religiously. I mean, he's a central bank geek. I'm not, but that announcement's happening later on this evening. And then you had factory orders for the U.S. were much better than expected, yet things like Canada's building permits were worse than expected. So not a lot of major pieces on U.S. news for today. Hopefully, we can get that more exciting news coming up later on this week. All right, what time we got? 43. Goodness gracious. Let's see. What else do I got? I want to bring up this question real quick. This is the question from. Bear with me. There we go. And unfortunately, I didn't get to this one earlier. This is from Mike. He says, I'm curious if there's a pattern number of up days in a row which would constitute an exhaustive move. I am sure it's more than 7, but I don't know if 10 or 13 or if one could hang on is a pattern number to indicate exhaustion. I show a fib extension for the stock warrant at $7.50, and it's on a security called DATS, D-A-T-S. So, look, there's an image here that goes with it, and I personally don't have a set number, meaning I don't go, okay, 1, 2, 3, 4, 5, 6, 7 up days. It's got to come down. What I do look at is the extent and how it's extending itself. So you'll notice on this bad boy, on this DATS, and this goes back about a week. So I'll show you here in just a second what it's done recently because it's actually gone much higher than this. Generally, when something makes a move like this, I'm moving a trailing stop up or I'm just taking my profit off the table. Just because, this security was $2, All right, actually under $2. It's about $1.60 and rallied all the way up to $9.47 in 2 weeks. That might be a little much for me. Now let's go look at DATS currently, because as you guys can see, boom, it's gone even higher, right? So when Mike sent it was Mike, right? Let me make sure I got Mike's name. Yeah, it was Mike sent this one in. DATS was right. It was there, all right? And he's like, oh, it moved up a lot. Well, look what it did after that. Boom, shot all the way up to almost $20, and now it's come cratering down. So this is normal. The question is, how far down does DATS go? The challenge I have with this one, Mike, and most people know this, it's an IPO. You've got something kind of brand new. So you don't have a lot of historical data to go off of. And usually in the initial 30 days or so, there's euphoria, there's excitement. And then you get the expiration period, meaning there's a lockup. So for a lot of IPOs, like DATS and others, there's a period of time where you cannot sell your shares. So let's say I'm the CEO of DATS and we go public and I've got 100 million shares, right? I can't sell my shares for, depends on what it is, normally it's 90 days, I can't sell my shares. So that's also important to know, is what's that lockup period, Mike? Because that might bring in a whole bunch of selling pressure on these IPOs. Now, that's not what you asked me. You asked me if there's specifically a number of up days in a row. No, I don't have a specific number of up days. When it goes parabolic, I would just simply move my stops. And one of the easy strategies, which many of you may be thinking, is you do something like this. I'll show you. It's a pretty simple strategy, and I try to keep things as simple as possible. So let's say you're right. You're at this point right here in this chart. Like, man, that thing's moved up a ton. Okay, well, if it breaks the low of the previous day, I'll get out. So I moved it up. See, I moved the blue line to the low of that candle. The next day, it jumped up. Great. I'll move my stop loss up to there to lock in profits. The next day, jumped up even higher. Great. Just keep on moving it up until it takes you out. Now, of course, there's going to happen times where you get taken out and you get totally pissed off because you could have made a lot more. Well, notice if we just did this basic strategy of moving stop losses up, I mean, it would have kept you all the way in until, was it yesterday? Yeah, Friday session. So there you go. All right, let's see, EVC. I got Chowsky asked, so let's do EVC and then I'll wrap up here. So here's EVC, Entravision Communications. Looks good. This is what it's called, an ascending triangle. It's a beautiful looking pattern because, as you can see here, it's had a monster run up. I think personally your biggest fear here, Chowsky, should be that it ran up too much, right? That said, I like what I'm seeing here because you've got this, it just feels like it's almost perfectly straight. This nice angled line here. Now, of course, my trend line is going to be a little bit off, but that's okay. This looks great. You've got this higher highs, higher lows. And while we're not making a higher high right now, the low is more important, right? As long as that low keeps moving up and making higher lows, then great. In theory, that pressure should build and you should break to the upside. So let me see what Chowsky says. Bought it heavy on EVC today. Ooh, boy, you bought today? Well, I'll tell you what, I would not recommend that, Chowsky. I don't know if today was a good time to buy, but let's see what he says. What are your thoughts, Merlin? By the way, I know some business owners, and they are slating supply shortage. Yeah, a lot of people are already building in for supply shortages because it's clear we're going to have supply shortages. So my only question or concern here, Chowsky, is this. Why do we buy right now? It's not at the downward trend line. So like maybe if you bought on Thursday because it came down to the trend line, right? You're buying where? You're buying right in this spot, which you're almost near the highs. So I don't think it's the best point to be buying in. Again, I'm sorry if it's not what you want to hear, but it's just what I'm seeing on the price chart. I wouldn't buy right now. I would buy if it dropped back down to this trend line and bought that. And if it closed below it, I would jump ship and get out. You could have a potential breakout trade up above 8, but remember, this over the past 3 weeks, it's actually been making lower highs. So you're starting to see, while it looked great, you do have this, right? And I'll extend that line out because a lot of times people say when it gets 2/3 of the way to the apex of the triangle, that's when it breaks out. I don't know if I buy all that stuff, but that's where we're at right now with your EVC. It looks like it's just compressing, although it is getting stronger because it's making higher lows. It's the first time in a while you've seen it actually make some lower highs. So that's concerning in the long run. Just make sure you have a stop loss on this one, Chowsky. Drew says Aussie dollar 85 by next year. Boy, the central bank would not like that, would they? Let's go to AUD USD again. 85 by next year? Woo, lordy. I have to go to a weekly or monthly to see those levels. So let's see. 85 you say, huh? Let's do this. Let's put a line on there. I'm going to go 85. And I'm going to put a little piece of text on this bad boy, which I rarely ever do. So let me go, where's my text box? There it is. And this was Drew. Drew's call. What day is it today? October 4th. There you go. I'm leaving that on that screen, Drew. You're committed now. Drew's call, October 4th, 2021. Oh God! Don't get me started with NJ with Shiba Inu. You're playing with fire. Those are shit coins. There's nothing there. Do I even have SHIB on here? I dislike that one so much. I think I even deleted it. But so there's your Shiba. What do you want in the USD? Okay, so there's your SHIB USD. All right. Huge move up today. I would unload. I would get out. I mean, when you look at what Shibu is, it is just purely a pump and dump coin. There you go, Drew. You're in trouble. It's purely pump and dump. So this one does not have much of a use case scenario. You can see some people out there saying, oh, it's going to be used for this, that, or the other thing. If you look at the community sites, there's really nobody really working on this. It's a pump. It's an absolute pump. So if you made 100% on it today, it's up 56% today, dump it. Dump it. Lock in profits. Move on. Yeah, no thanks. I don't mess with that stuff. I mean, I mess with Dogecoin just because Elon Musk was on CNB or on Saturday Night Live, and I kind of felt that was a buy the rumor, sell the news kind of thing. All right, let's see. What else do I got? Let's show you what's happening tomorrow, and then I can wrap things up for today. Again, we have the Australian rate announcement tonight. Tomorrow night, you have the New Zealand reporting their rate announcement. But you can see here on the screen, really for the entire world, it's financial services. You can see you got services PMI for Spain, Italy, France, Germany, the EU. Usually the UK is in here. Oh, I cut out the name of the countries. Isn't that great? You have trade balance numbers for the U.S. You also have ISM services PMI and final services PMI for the U.S. So that's pretty much it for mañana. And then there's your earnings. PepsiCo, that's it. I got a different format because there was only one, not really anything worthwhile. PepsiCo Incorporated, PEP is your ticker symbol, and that's before market open tomorrow, which is generally more boring for those of you who traded a while. If you look at the price charts of companies that report earnings before market open, that's generally a New York Stock Exchange, and it's boring. It doesn't have the same pop. 4 letters or NASDAQ securities are generally after market close, which makes them very, very volatile and much more exciting. So I like looking those. Oh, NJ, hey, thanks so much, man. I appreciate it. You're always contributing. I do appreciate that, man. Thank you so much. Big Ab says it could always go with Floki Merlin. Oh, man. This is Elon Musk just making fun of it all, right? Naming his dog Floki and coming up with the Floki coin. Jeez, that's crazy. Katut, and by the way, Katut, I got your email. Thank you so much. I'm looking forward to it. I got to get rid of these shirts, and I'll be wearing some very nice festive shirts from Katut here soon. There you go, Brendan. Market open. What is this? What is this thing called an open? Yeah, it never closes either. The only true market out there is the crypto markets. 24 hours a day, 365 days a year. All right, guys, that's going to do it for me. I got to run. We did almost an hour show today. Got to make catch up, right? Make do for my lack of shows on Wednesday, Thursday, Friday. Again, if you like today's show, thumbs up. If you're new, hit that subscribe button. If you want to send in comments and questions, do so. TraderMerlin@gmail.com. That's the easy way to do it. You can just email me there, and I will hopefully get those topics for the show today. For those that did send in comments and questions today, I did get a couple good questions from Mike. I got one out there from... Who was the initial? Amy, concerned about her Facebook. Yes. Oh, Facebook. Big Brother is watching. Enjoy, guys. I will see you on tomorrow's show. Thank you.